Hi guys, how are you? I trust you're all doing great. Okay, this is Bulelan here. Right, so today we're doing what? The strategy review. Okay, so we want to review our strategy. Okay, remember what I said to you? I said number one, we are looking for what? For liquidity. Okay, so where is liquidity in the market? Right. So I want to see liquidity in the market. Want to see liquidity being what? Being taken out. Okay. When liquidity is being taken out, then now we know that okay, we've taken this liquidity. Now we want to see a what? A return to our what? To our fair value gap. Right. Or you can just say, I want to see a what? A break of structure. Then I want to see a what? A retest to my fair value gap after that break of structure. Okay. So you're looking forward for a break of structure, then a return to fair value gap. This fair value gap, it must be around those areas where there was what? There was the break of structure. It can be the same candlestick that broke your structure, right? We want to see that imbalance around those areas. Then that give us a confirmation that this trade is more likely to what? To continue going down, right? Because we're looking for those high probability setups. So we want to see this coin or this candlestick breaking our structure with a very strong imbalance, right? So once this imbalance uh, break our structure, then we want to mark our imbalance and we wait for the market to what? To rebalance our imbalance. Then we take our trades. Okay. So this is what we are looking for. So we'll be the testing to see if what I'm talking about it does work and how often does it work. Okay. So we're looking for what? For a breakout structure. Let me just go to 3 days before. That's the second day. That is the third day. Okay. Let me go to this one. Let us start here. Okay. So we're looking for what? For a break of structure, isn't it? Then after we break our structure, we want to see a what? A return to our what? To our fair value gap, isn't it? Right. So you can see what happened here. What happened here is we when you wake up in the morning, some of you could have taken this trade, right? You can see a breakout structure. Here we broke our structure, right? So you can see this breakout structure. But then now what happens is after this breakout structure, the market is just what? It just goes up with high momentum, right? It goes up with high momentum and it breaks your what? Your structure, isn't it? It breaks your what? And it hits your stop loss. Because if you take your trades based on our strategy, right? We could have taken our short entry around this area, right? As soon as this market hits around this area. So you can see this could have been what? This could have been one of those losing trades in the what? In the market, right? But also now if you are what? If you are vigilant enough, right? If you are vigilant enough, you could have taken this trade, isn't it? Uh, based on that order block, but you don't use order block, guys. So that let us just take this loss here. That okay, this could have been one of those losing trades. If you are only looking for this in the what? In the market, okay. So we had that here. So we had that breakout structure, but the market it what? It failed to what? To hold. Then it hit our what? Our stop loss. So now what happened again here? With that we have what? Now we have what? We have another breakout structure here breaking our imbalance, right? So this is our breakout structure. We create liquidity because there's what that a lot of what of equal lows around those areas. Then there's liquidity resting below these areas because there are a lot of what of equal lows, right? Then that give us what? It give us liquidity. So you can see we broke our structure with high momentum. Then once I see that breakout structure, I wait, right? Or you can set your what? You can set your limit order that okay, you want the market to what? To execute your trade immediately when we fill this gap, right? So you can see the gap, it was what? It was filled, right? Successfully filled, right? So it could have been what? You could have been within this trade, right? Could have been within this trade. Okay, so what about this? Right. So you could have been within this trade, you're taking a short entry. That is what we're looking for. We always wait for our high probability setup to play out, then we take it. That's it. 1% stop loss. That's it. Okay. So you can see how it played out. Nice breakout structure, nice rebalancing your fair value gap. Then it's what you smash your TP. Same thing applied here, right? If maybe you missed this trade, then you saw this gap. That okay, I have this I have this breakout structure here, right? To break my imbalance. So now I want the market to rebalance this area, right? Immediately when you wake up uh, around 12 midnight. Now you'll find a good setup, right? It's a good setup, right? Then this is my fair value gap. Is it rebalanced? Yes, it is rebalanced, right? Uh, Although I think here your stop loss, it could have been hit, but you could have made that 1% on spot. You could have made that 1% on spot in that trade. Okay, so this is how you trade it. This is how you trade the market. Same thing applied here, right? Let me cancel this one. It's not that conducive, but you could have taken it as well. Same thing applied here, right? You can see the market, it went up, we broke our structure. In fact, we broke our structure here, but I can even mark this lower low as our long-term breakout structure, right? So once we break structure like this, where is my first fair value gap, right? What is this high probability fair value gap that I can look for, right? So my high probability fair value gap, it is what? It is that gap at the beginning, this gap. This is my high probability fair value gap, right? So I'm looking for the market to what? To rebalance this gap. Then I'm taking my short entry, right? So you can see here the market, it came around this area, right? So what your trade is being executed, maybe took it around here. Then your stop loss, it is 1%, 1%, right? Somewhere around here. Okay, we can do it like this. That is why I always recommend that let your entry point be around the center, right? Around the center of your fair value gap, right? So here you make 2%. Yes, you make 2%. Your stop loss, it can be above these highs, right? You can set your stop loss that, okay, I want to set my stop loss to be above these highs, right? So that you can save yourself from what? From manipulations in the market, just in case you get in the market too early, or maybe you are late in the market, right? Just avoid the manipulations. You can set a stop loss right around the what? Around those higher highs and lower lows. Okay, right. So this is what we're looking for here. Yeah, you could have taken this trade. It was a good trade. Same thing applied here. We had a what? We have now a very long fair value gap, a very long imbalance, right? So remember what I said to you. When we have an imbalance that is this wide, you can see how wide is this imbalance, right? So now when I have an imbalance that is this wide, there is a breakout structure, yes. There is imbalance, yes. But now you can see how wide is my fair value gap. So I just mark this gap. I mark my gap, right? I mark my gap. So you can see how wide it is, how wide it is. It is very, very wide. So remember what I said to you. When we have a fair value gap that is this wide, what are we looking for? We are looking for what? We are looking for our entries right at the end or towards the end of the fair value gap, right? Towards the end of the fair value gap. So you can see here we kept going up, going up, going up, going up. Then eventually we started what? We started respecting your what? Your fair value gap from here. You started what? Respecting your fair value gap and started going down, giving you that what? That nice 2%, right? Stop loss, it is 1%, right? Somewhere around here. So you can see how the strategy works. Only when we are looking for what? You are looking for 2%. If you are looking for what? For 2% on spot is your take profit, isn't it? The same thing applies here. You wake up in the morning, you can see the market goes up. Then you can see this basically this strategy, it teaches you patience. That you must be patient in the market. Be patient, okay? So you can see we go down, we break our structure. Then there is what? There is our fair value gap, right? Here's my what? Here's my fair value gap. Then once I see this fair value gap, I want the market to rebalance it. Is it rebalanced? Yes, it is rebalanced. So what you can see, or what you can notice about this strategy is that it works almost every day. So every day is a what? Is a payday, right? Remember I said to you, when a fair value gap it is not that wide, you can take your entry right at the beginning of of a value gap, so that you might not miss those good trades uh, in that setup. Okay, so target is how much? It is 2%. uh, it is 2% on spot. So let us see if you make that 2%. Yes, you make 2% on spot. uh, make 2% on spot. Good trade. It's a good trade. It's a good trade. It's a good trade. Okay, so basically this was one of those good trades in the market, right? So same thing applied here today, right here. Same thing applied here today. We had our what? We had our break of structure. Why did I take this trade? I missed this trade, eh? So we had this break or structure. Boom, break our structure. Then once breaking our structure, you wake up at 12. You see that okay, we broke our structure. And this there's this fair value gap, right? There's this fair value gap here, right? There's this imbalance that is formed here. So as soon as I see that imbalance, I want it to be what? To be rebalanced, right? So I could have been in this market earlier in the morning, right? Very, very early in the morning, right? Could have been within this trade, taking that short entry here, right? Targeting 2%. Let's see if we will make that 2% in this trade. Okay, stop loss. It's very, very ideal, right? It's very, very ideal. So this is one of those good trades uh, we don't want to miss. Okay, so this is what we're looking for basically right now in the market. You can see it is going down to, it is respecting this gap, right? So this is how we trade the markets. This is how we trade the markets. This is how we trade using this strategy. So that is what you are looking for basically whenever you are trading with the strategy. So I'll take questions, guys. As you can see, my phone is switching off. So thank you so much.